everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. Well, we did it. The SPY hit our long talked about Elliott Wave target of 420 in this past week. However, in the past couple recordings, I've been mentioning some storm clouds that are building on the horizon. In the last recording, we talked about margin debt to GDP. We're going to add a couple more clouds in this recording. We're going to talk about the Buffett Indicator. Berkshire just had their big annual meeting over the past week. And we're going to talk about short interest, where that stands in the market right now. So let's get to the charts. At the time of this recording, it is 3 a.m. Eastern Time on Sunday night / Monday morning, and currently the futures are up 15 points. And the futures market opened, they ran right up to that 420 level, backed off. Now we're creeping back to the upside again. Speaking of 420 level, there it is, actually hit on the 29th of April. We've been talking about for the better part of a week or so now how we're consolidating right under the 420 level, but we actually did finally touch it. In the last recording, I talked about how the market had started off with back-to-back dojis. Well, the doji fest continued. Every single day last week ended with a doji. I'm not sure I can ever remember that. And I've been doing this for 25 years to where Monday through Friday, every day ended on a doji, especially when we're underneath a significant fib level like we are now. I don't profess to be a candlestick charting expert. I know there's different kinds of dojis. You have the standard ones, you have the long tail dragonfly and gravestone, etc. And then you have different patterns like spinning tops and all. For me, I use the definitions where they talk about the open and the close are similar. Each day last week, the open and the close were similar, within a point of each other on each of those days. And then we had this big dragonfly doji up here that occurred on the 29th. In general terms, a doji means indecision. So the market has no idea where it wants to go either. So I talked about in the intro that we had some more storm clouds to talk about. So let's get to those. In the last recording, we talked about this margin debt to GDP and how we were going vertically to the upside here, meaning that there's a great appetite for risk-taking currently in the market, specifically with retail traders. And that's usually kind of a sentiment indicator, kind of one of those contrarian indicators that tells you that maybe the appetite for risk-taking is a little too high right now, and it should be viewed with caution. Well, here's the Buffett Indicator. I mentioned in the intro that we had Berkshire's meeting this past week, and Warren Buffett was talking about this. He was talking about how Berkshire couldn't really find anything of value in their consideration to buy, so they're just buying stock back, but they're buying stock back at a slower pace than they have been. But what is the Buffett Indicator? Well, here it is. Basically, it's when the market valuation is higher than 2 standard deviations from the norm, the historical trend line, which would be 0%. So you can see this red area here is the 2 standard deviations. The internet bubble, we got 67% above. So when you get above the 2 standard deviations, that should only occur 2% of the time. And now you can see that over here, we're 88% higher, much higher than we were back over in the internet bubble, which set off the 2 years of market to the downside. Now, a lot of people, when you start talking about market values to GDP, would quote the fact that, hey, interest rates are at historical lows as well. There's a lot of liquidity that has been pumped into the system by the Federal Reserve. That has to be taken into account as well. And that's a fair point. So that could add to extensive valuations, if you will. However, when you see how far above we are, even with the internet bubble that we had, I still think that it's showing that we are significantly overbought as far as the market with the historical trends. And then you have someone that really focuses on fundamentals, as Mr. Buffett does, showing that, hey, he doesn't see anything that he's willing to buy right now. In fact, he thinks that this is a good time for caution. So I thought I'd share that with you because, again, moving vertically over to the upside here. And if you've heard me say anything on any videos, you know I don't like it when things go vertical because usually when they go vertically up, they come vertically back down. Now let's look at short interest. That's been a big subject lately with all the Robinhood Reddit people trying to create short squeezes, if you will. Well, you can see here that short interest has come down significantly. This is the beginning of 2021, and you can see where we were back in March after we'd had the big drop from the COVID news coming out, the shutdown, etc. Well, it would make sense that short interest had skyrocketed at that point in time. So what does that mean when shorting is high? Well, remember, when you're shorting a stock, you're selling to open. Then you buy it back later. Well, if you've sold something first and then it starts to go up, or if it starts to go up significantly, as in a short squeeze, you're forced to buy it back. And when it starts going up pretty quickly, then you get this forced buying really quick because you have margin calls that are going out. And that's another problem with shorting stock, is a pretty significant margin requirement. So that can aid in the market moving to the upside. If there's a lot of shorts, then they are forced to cover, whether it comes from individual short squeezes or just from a normal movement to the upside. Sometimes a heavily shorted stock will come out and they'll report good earnings, all the shorts will cover, and then you get a big jump to the upside. Occurs a lot. So there's something to consider in addition to, is this the biggest short squeeze in market history? So here's a good example of how it's affected the market itself, not just individual stocks. You can see the Goldman Sachs index of the 50 most shorted stocks is that blue line. And then the Russell 3000 is down here in that goldish line. So we can see that the fact that the heavily shorted stocks have been moving up significantly, well, that's given a big boost to the market. But if we're now to the point where short interest is down, we don't have that as a driving force anymore. Now, some will say the only driving force we need is a Federal Reserve. We don't need any of these other things to drive the market to the upside. Well, we're going to find out. My point is, I'm not trying to be a sayer of doom, etc., but I've been on the record as saying that if we ran straight to 420 without a correction, I think that would be a good opportunity to consider short positions or trading the downside a bit. If nothing else, I think it's prudent for you to protect yourselves, put some downside protection on your trades. I do think something's going to happen this week. I look forward to the next recording. 5 dojis, basically the 6th one here with the perfect one back on the 19th. Something's getting ready to happen in the market. I think we're going to make a significant move in a very short period of time. What are your thoughts? We're going to break to the upside? Are all these storm clouds going to create a cloud burst, if you will? We're going to move to the downside? Leave us a comment. And while you're at it, please hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. Thanks. We really appreciate it. Hope you've had a good weekend. Be back to talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.